Hey, what's going on, guys? Edward here with another video. Thank you so much for being here. This time, I'm just going to respond a few questions that you guys were asking on my Telegram group. And so some of those questions were pretty much regarding price action. You guys love price action. You want to see more about price action and risk management. So just right here, just to give you an example right quick here. This is very important. This is something we don't follow. And I sometimes include myself in here. It's so hard to stick to the plan, but we have to follow. We have to definitely apply this into our trading plan and apply it, start applying it, okay? So as we've been learning pretty much from the beginning, when you started hearing about Forex, everybody was saying, hey, you should be risking only 2% per trade, okay? But we don't know how to do that. Maybe we don't know how to measure it, or maybe you don't care, just like, hey, you know what, whatever, I'm just going to trade. So it is so important to follow this, okay? Some traders may risk maybe 1% or 2%. I've heard that some traders risk like 5%, but that's a lot, I would say. Sometimes I do risk, like, I have to admit it, like 10% or 5% between that range of my account, and that's something bad. But guess what? I would say that the more time you spend, the more time you have trading Forex, and the more you are become actually profitable, at some point you're going to risk more than 2%. And let's be honest, all those traders that say, oh, I only risk only 2%, that's not true, you know? They may, I know there are some traders that are more, conservative, right? I know there are some others that are too risky. Those most likely are the ones that, do have all those, flashy things. They have Lamborghinis and Ferraris and all that stuff. I know they do risk more than just 2% of their account, but because why? Because they are pros, because they know what they're doing. They know the market, okay? So they have been trading for a very long time, so they know what they're doing. So it's at a certain point, if you know what you're doing, sometimes you are going to be trading more than this, to be honest. Without lying, not lying, and being honest, exactly, you are going to be risking more than this. But because we are starting, okay, if you're new, if you just starting to trade, the recommendation is this 2%. You have to stick to this plan until you compound your account and you grow your account. Let's say you started with a $300 or $500 account, and you are compounding it until you are reaching the $1,000, okay? And then so on. Now, once you have $1,000, you know that the 2% of a $1,000 is higher than the 2% of a $500 account, okay? Of course, it's double. So you're making more at a time, you're making more money at a time. So you see, it's step by step. You cannot just think about creating an account of $500 in the next couple of trades. You want to double that, you want to triple that. That is crazy, that is stupid, and that's why you keep blowing your account, okay? Another thing, guys, very important. To start trading, you should start at least, I would say, with what we are doing so far in my channel, at least with a $300 account. If you go lower than that, you know that, for example, just right here, you see the 2% of a $500 account is $10, okay, per trade. So it means that you should be risking $10 per trade. So if you're aiming to let's say 1-to-1 risk to reward, you're risking 10 to win 10. 1-to-2 risk to reward, you're risking 10 to win 20. Okay, so just thinking about that, just think about it, and it's actually really good. So you're making pretty much like 4% of your account in one single trade, and that is a lot. But you don't see, you guys, you don't see it like that. You wanna be rich so fast that you're blowing your account because you're so excited, and you want to just you're thinking that this is too slow. Man, this is too slow. I don't want to, where am I going to grow? How many months, how many years until I get this 500 to, who knows, $3,000, $5,000, $10,000. How many months? So you think like that and you blow your account, okay? You have to be patient. You have to trade slowly, okay? Concentrate, and I always tell you guys this, even on the mentorships, concentrate in the technique and the strategy, on mastering the strategy, okay? If you only make $1, $10, or $1, $2 in one single trade, depending on your account, but you only make $2, and but the price actually went in your direction and it hit your take profit. If you were scalping, for example, just scalping, then you should be happy if the price actually reached and touched your take profit. You should be happy there. It doesn't matter about the money yet. You are just getting in there. So the more you practice, the more money you will get in the future. You need to keep practicing this, okay? Even sometimes just go on a demo, practice on a demo. Don't go on a $100,000 account demo. Go in a realistic one. Go in a $500, $300 account, and go and follow. Try to stick to this plan, and you will see the difference, man. You will see the difference. So let's say you have a $300 account. Let me get the calculator. If you want to start, which this is the idea of starting. So at least $300 minus, let's say, 2%, so $6. So you should be risking only $6 per trade. Or here you go again. You have a $50 account minus 2%, it's $1. So you see right there, you already, like, it's too small. You might think, man, it's just $1. Then in this case, with $50, it's impossible to trade Nasdaq or US 30. It's almost impossible. Like if you're new, if you're a starter, most likely you're gonna blow it. Now, if you're a pro, yeah, I'm pretty sure you can get it. But because your guys are starting, the $50 account is too small because you are gonna have losses. You are gonna have losses. Okay, a pro trader may be showing a YouTube video there, maybe growing a $50 account with trading US 30, and he might actually do it. It could actually be real, but it's because he knows what he's doing. Okay, so he might have or encounter less losses than you. So because you are starting, you most likely are going to be blowing this account. So $50 is too small. Okay, don't do that. It's better if you just save your money, practice on your demo until you get to 300 at least, and then you start compounding your account step by step, risking 2% per trade. Okay, just think about it. Alrighty. Now let's jump in on the chart and let's see maybe what we can find here, and just an example of how much we can make. So since you know that, well, pretty much from the beginning, I explained you that I'm a breakout trader. I love breakouts and I specialize in that. You know, since I started actually trading, I love finding trends and trading on the actual breakout. So like basically my indicators, all my indicators were based on the actual breakout. So let's say this is a trend right there. This could have stopped you out. This was a fake out. It will happen. There's no indicator, no one in the world that can actually predict that this was a fake out. Most likely you would have entered there aggressively. But look at this. So this is a trend, right? We are on a pretty much the price creating structures. You can see price is breaking the structures right here. It's creating new highs. Basically breaking the structures to the upside, creating supports, breaking resistance. Right there, there is a massive song. So you see a structure, basically. The price is creating the structures. I'm showing you this on a pair because, you know, price action is basically, you can apply it everywhere. It's the same everywhere. So maybe right here you saw a flag. This zone maybe will stretch all the way down. here, most likely was something like that. So you see where it was a resistance in the past, it became a support, and then started bouncing. So you see it's creating a structure as the price is pushing up. Now, the breakout, when it happens, let's suppose we didn't see this, or I don't know, we got stopped with this one. We got stopped out. Or let's say this was not here. So you're starting to see a breakout. Let's say you are on this trend and you duplicate this. What I do is, let's see this breakout right there. So as soon, if you're aggressive trader, you might be getting in on the breakout. As soon as the candle closes, the body of the candle closes, you are getting in there. Boom. Stop loss above the last high. And the take profit at this point, I'm going to give you this tip. You can use, whenever it's a trend like that, a very strong trend, you can use your Fibonacci from the bottom to the top. And there are several points where you can take your profit. So you can take your profit. First take profit here, 38.20. Second on the 50. Third on the 61.8. Okay. What's the risk to reward ratio right there? It's 3.56. So risk to reward it's 1 to 3, almost 1 to 4. Yeah, 1 to 3. Let's put it 1 to 3. I'm gonna put it 1 to 3 risk to reward. Right there, 1 to 3 risk to reward. So it means that you should be risking right here. If you have a $500 account, you should be risking $10. You have to calculate. You have to calculate how many pips are here. This is 74 pips. Okay. So most likely with a 0.01 lot size, you're risking there about $7.4, depending on your broker. But that would be a kind of like, if you're entering with a 0.01 lot size, you're risking there 7.4. Now, if you enter 0.02, then you're overpassing your $10 risk per entry. You see what I mean? You will be risking $14, about $14, $14 to $15 will be risking in this trade if you enter with a 0.02. So because the stop loss is right there, it's a little far away, but you know you're actually trading as it should. Okay, so 2% of the entry, you're risking 2% of your account, and now you're gaining 3. So 7, about $18, $19. Let's see, $21, $22. About $22 you could be making in here. In fact, you can see 224 pips. So with a 0.01 is $22.04, something like that. All right. So you're risking $7 to win $22. All right. That's with the 1 to 3. Let's say you want to do 1 to 2, so it's $14. You want to do 1 to 2, it's $14, almost $15. Okay, per trade. If you want to go safe in there. Okay. So breakout, you see what happened on the breakout? Beautiful entry. I am aggressive trader. Sometimes the price, you rather maybe wait for the retest, and most likely in pairs, more often than not, after the breakout, the retest will happen. You will be seeing more retests. And in Nasdaq or US 30, almost never there is a retest. Sometimes it's the price. If there's a breakout like that very strong, it would just fly away. It would just go away really, really quick. So if you're aggressive, you enter on the breakout. If you are a more conservative, you wait for the retest, wait a confirmation here, and you enter on the retest. Okay, that is up to you. Now, with my TP strategy, okay, the ones who've been following me for a long time now on my YouTube channel, you know that TP strategy is based on 3 indicators that would pretty much confirm the breakout of the trend. Okay, so the trend, this is the uptrend, you see. So let's see how many confirmations we're going to see. I'm going to find here. Let me remove the Fibonacci. Okay, so we're seeing the first confirmation, and the strongest one is the price action, which is breaking the structure already to the downside. Okay, that's your first confluence. Now you look on the RSI, when the price is below the 50% on the RSI, it means we are going to sell. If it's above, it means we're going to buy. So it's an uptrend. And when it's below, it's a downtrend. All right. So we immediately see the price is below the 50%. All right. That's a second confirmation. Now we open up our WMA line for the TP strategy, and we'll see that pretty much our three lines are crossing now. The price is breaking those three lines and it's telling me to sell. Okay, that's a third confirmation. And the fourth confirmation is the Ichimoku cloud. Let's see. It's kind of breaking right there as well. So when the price is breaking below the cloud, it means they're selling. So we have four confluences already, four confluences. In fact, let me see if I can catch. Aha, look at this. You see, I always tell you when I'm also on the Telegram group, I always tell you that the RSI is very good for predicting divergences, for predicting when the market might actually reverse. So you're starting to see a divergence already here on the top. You see prices creating higher highs, and higher lows, and lower highs, I'm sorry. So you have another confluence right there. The price is giving you the divergence, so it means at some point the price will start falling. So maybe you can put that as another confluence. You have 5 confluences now. The more confluences, the better. And that's it. Boom, boom. You made your entry. And beautiful entry there on that trend, on that breakout of the trend. Let's try to find another trend. Let me just move maybe this push. That looks kind of cool. Let's see just this as an example. Right there, okay? Beautiful push. Price is creating the structures and breaking the structures. So it's creating a structure right here, broke, retest, and started bounce. So creating another structure, breaking another structure right there. Right here, it's a very strong structure. And then the price start to push up. Now, let's try to go here before. If you're on a trend, you can keep an eye on the RSI. Keep an eye on the RSI. And the RSI will start telling you, hey, I might be, it might be the end of the trend. Okay. So look at this. Even from here, the price was creating higher lows, lower highs right there. And here is higher highs. That's already telling you something. So what you need to do is just wait for the price to actually break. You cannot just make a decision just because you saw the divergence there. Oh, I'm going to get in on a sell. Nope. You have to wait the breakout. Okay. So you're patient and you waited for the breakout. Right here, it was consolidating, even did a retest, it broke, and then did a retest in there. So let's say you enter aggressively on the close of this candle. Stop loss has to go above. But you see that at this point, how much you're risking here? You're risking $11 with a 0.01 lot size. It is already $11. You see why a $500 account, it looks like it is still too small. Do you see what I'm saying? Even with the smallest lot size that you're entering, a 0.01, now you're risking $11. So you're risking more than you should. Remember, it was $10 per trade. Now you're risking 11. You see? So sometimes, depending on what you're doing, of course, I'm entering on a 4 hours. So that's why it's a big trend. And there's a lot of pips right there. It's 112 pips stop loss. It's huge. So just right there, your account is small. You see what I mean? Let's say you had a $50 account and you put the stop loss, you're risking already 10, you're risking 11%. No, risking more, 20-something% of the account already there. So it is math. You see, you're starting to understand that will make sense now if you start doing that. So 1 second. So please be careful, okay? You're starting to see that a $500 account now is starting to look small, okay? You're actually risking more than you should right there. and it's going to happen. Sometimes you may have to risk a little bit more. Traders, professional traders, they will always tell you, oh no, I only risk 2% of the account, but because they have most likely a $100,000 account, and risking 2%, that's still a lot. So right there was a 1 to 2 risk to reward. You were risking $11 to win $22. Okay. Now let's see what happened with the signs. So first confluence we got is the divergence. First confluence. Okay. Second confluence, the price breaking the structure. Okay. And the most powerful is that one. Okay. The breakout price action right there. So on the RSI, let's see, the RSI is already below. You see the price is below the 50% of the RSI. Good. That's our third confirmation. Let's see the WMA. Boom, you see WMA breaking, is breaking exactly where it's breaking the actual trend, okay, the structure. So it's coming below. That's your fourth confirmation. And now the fifth confirmation, the Ichimoku, let's see if we are below. We are not, kind of like, it's not there yet. It's kind of like on top. It's not recommended. Like whenever they say is that whenever the price is touching the cloud, is neutral, basically. Don't buy, don't sell, don't do anything there. But that's a 4 hour, as I mentioned. If I go, I'm just doing this based on the 4 hour, which is huge. So if I go, let's say on a 2 hour, most likely I'm already way below. You see, the price was already below the actual cloud. So because I'm just showing you the example on a 4 hour, that's how it looks. Well, you see, you have pretty much all the confluences right there. More than 4. You have 5 confluences in there. So it is beautiful sell. As I mentioned, to take your profit, you can either do 1 to 2 risk to reward, as I mentioned, or you can go from the low to the high and aim your profit. First take profit, second take profit, third take profit. Right there. Now, because it is a pair, you know, pairs are more, they make more noise, and it can take, this is what, 349 pips. They can take a few days, few weeks to reach this amount of pips. So anyways, that's the idea. Since I am a breakout trader, I love trading breakouts. I perfected this breakout right here, and I found the indicators to make it better, okay, to confirm the actual breakout right there. So I think that would be all pretty much, guys. I hope you understand now how I trade the breakouts on the trends, on risking. Please just be careful and have the idea, like here, like it just happened. You see, depending on the type of entry, if you're doing a scalping, most likely you won't have any problem. But because this type of entry, you know, let's say you would have spotted the breakout on a 4 hour, you were like, oh man, should I enter here? Then okay, you could, but then the safest way to put the take profit is on top of that. That's the safest way. If you didn't want to risk that, that's up to you. Maybe you could put it and maybe below here, and you're not risking the 10%. But the safest way, usually like this, is on top of the last high. Okay, have that in mind. You can do it lower, you will be risking less, but the percentage, the probabilities that this thing could actually go up and try to spike and take people out, it is going to happen. So just be careful there, okay, with that. All right, only 2% per trade. Just practice it, guys. At least $300, $500 account to start trading. And if you want to start trading US 30 or Nasdaq, at least 300, 500. It cannot be lower than that. It shouldn't. You could, if you're a pro. If you're a pro, you're welcome to use a $100 if you want. Jeez. But because you're starting, guys, it's better for you to save some money. Don't blow the $50 account you have. Don't blow the $20 account you have, because I know most of you are trading with a small accounts. You might say, hey, I don't have the money. Recommend you keep trading on demo. Keep trading, learning on demo. I might be doing some things in the future that, like, if you show me, I don't know, I might be doing some giveaways maybe in the future. I will think about it, see if I can help some of you guys. But I need to see results. I want you to tell me, hey, Eduardo, I mastered this. You can write me on my private on Telegram as well. Hey, Eduardo, I started with a $100 account, and look at the results, what I'm doing. I'm following your thing. I'm actually having the results. So at some point, I might be doing some giveaways, maybe to fund one of you guys' account with maybe $300, $500 account. I may be doing it in the future, but please don't stop blowing small accounts. Okay, just it's better if you keep saving, save your money, trade on your demo, and then after you perfect this, you hit me up. Alrighty. Thank you guys for watching. That would be all. If you are new in the channel, please subscribe, leave your big thumbs up. It will help me a lot. If you want to share it as well with some friends, go ahead, man. I really appreciate. See you guys in the next episode. Take it easy.